Welcome back, everyone. This is the gold market review for the 15th of March. A notable correction to the downside has captured gold's price in the most recent daily sessions. At the moment, gold is trading below the $2,000 round level after performing a swift run to the new 2022 high price in the past week. The large swing for gold's price seems to imply a drastic change in economic developments around the world, and this report aims at bringing these factors to light. Leaving aside the fundamental updates presented in this outlook, our gold report can also be used as a guidance to trading through our technical analysis, which will point out important levels and possible trends. Enjoy the report. The fact that gold has made a substantial correction to lower grounds can be attributed to several reasons. First, gold's price rushed to a new 2022 high on the 8th of March as sanctions against Russia were announced. In this case, the risk-on sentiment, which sometimes fuels gold's price, may have been removed. It is also possible that gold may have been undertaken by a technical correction, as traders that joined the bullish market in early March may have booked significant profits, allowing them to lock in the gains. Furthermore, in the past sessions, the US 10-year Treasury yields rose above 2.1%, a sign which may be considered bearish for gold prices. Another bearish sign for gold could be its adverse relationship to the US dollar. In the previous report, we had noted the correlation between gold and the USD may have been positive, but as the greenback stabilized higher in the past days, gold's price dropped, confirming the competitive nature is back on track. In addition, gold could be in a positive correlation with oil prices at this time, as oil is trading notably lower compared to last week. In the current week, gold traders are in a favorable position to have an exciting economic calendar to work with. The events are spread out throughout the next days and may create substantial volatility for gold's price. Starting on the 16th of March, during the early US session, we get the US February retail sales rate, while later on the same day, we expect the key economic event of the week, which is the FOMC meeting. This event is of great importance for the gold market, as the central bank is expected to announce a rate hike of 25 basis points. On a side note, Fed's fund futures currently imply a probability of 91% for a 25 basis points rate hike, while the remaining 9% is in favor of a 50 basis points rate hike. In this case, the actual outcome of the meeting could create different price reaction. Even though a 25 basis points rate hike may have already been priced in by the market, in our view, a 50 basis points rate hike could create an extraordinary volatile session for the markets. This will be the first time the Fed will hike rates since December 2018. The event will take place during the mid-US session and will consist of the economic projections, the FOMC statement, and the FOMC interest rate decision. 30 minutes after the release, we will also get the FOMC press conference with Chairman Jerome Powell's speech, where he will also be replying to questions. This event has the potential of moving gold prices abruptly, and traders may have to approach the market with caution as risks could be elevated. On the 17th of March, we get from the US the weekly initial jobless claims, the February housing starts number, the February industrial production rate, and the March Philly Fed business index. Finally, on the 18th of March, we get the US existing home sales for February. Moreover, traders are also considering actions carried out by other major central banks in the world. At this point, it could be useful to note the fact that BOE is expected to impose a rate hike on the 17th of March. Additionally, during the past week, the ECB announced a faster than expected reduction of its asset purchase program. These actions could be signaling a post-pandemic economic transitioning period for some of the major economies of the world, and some of gold's recent price action may have been a result of these changes. On a separate note, gold traders continue to monitor developments of Russia's war in Ukraine. Even though no signs of progress to ceasefire have been made, gold's price has returned to lower grounds and may not reflect the fact that Russia's military operations seem to have intensified recently. Moving now to our gold technical analysis, please note this is gold's 4-hour chart. Gold's downward trend line has intensified in the most recent 4-hour sessions, as the trend is highlighted with the yellow descending line on our chart. At the moment, gold is trading at 1925, which is exactly in the middle of our range between the R1 1950 resistance and the S1 1900 support. Yet, if the downward movement persists, the S1 1900 could be engaged and tested. In this scenario, traders may turn their attention to even lower ground, picturing the S2 1881 line, which was approached briefly in the last days of February. At the end, the S3 1852 is noted as our final support. In the opposite scenario, if gold regains upward momentum, we may see the R1 1950 line being targeted. Higher, the R2 1975 level, which has been the February high, is imminent, while even higher, the R3 2000 line may act as a barometer for the bullish trend. For this analysis, we have selected to insert also the R4 2051, which is also the 2022 high reached in the past week. Currently, gold remains in a downward trend line, yet if the price action continues to move within the R2 and the S1 range, we may see a sideways motion forming. The RSI indicator is currently testing the 30 level, giving the notion for a bearish sentiment. We thank you very much for your time and focus. We appreciate your participation, and if you like this video, please feel free to share and subscribe. From everyone here at IronFX, wishes for solid trading.